Well, another part of supply. Supply includes importation of service. So importing the services. Importing of goods, not here. So when somebody imports the services, this is included whether or not for consideration. This is very important. So even if it is import of services without consideration and whether or not in the course or furtherance of business, so everything is done away with. The moment the import of service happens, tax can be there. And service means other than goods, everything. Okay. Import of service is also defined. Supplier located outside India, say at US. Recipient located in India. Place of supply of service is in India, and the supplier and the recipient are not merely an establishment of a distinct person. Right? Now this is the definition. That means any services I get from foreign, maybe my counterpart, is a supply. Explanation 1 reads like, an establishment of a person in India, so my organization, my establishment in India, and my other establishment outside India, say I have a branch office at US, shall be treated as establishment of distinct person. So that means the branch manager and me are different. Though it is X Limited India, X Limited US, my own company, my own subsidiary, 100% subsidiary, yet it will be treated as distinct persons. Maybe my own division, no separate company formed also, but yet it is treated as distinct persons, or GST law. Explanation 2. A person carrying on business through a branch or agency or representational office in any territory shall be treated as having an establishment in that territory. So it is also defined that what can be there at that place. It can be a branch or agency or even representational office. Something different from permanent establishment, what is generally understood under the direct taxes. Well, this issue will arise now. Architect or a doctor relative, say my brother-in-law is at US, or any other relative, or any other person, no relation also. He's a professional, architect or a doctor. I have some problem in my family and I seek his advice, and he gives me an advice, do this, do that, take this medicine or take this particular course of exercise and you will be free from the problem. Is it a rendering of services? Answer is yes. Suppose somebody, I go to any other person, say if he would be charging me $1,000, but he supplies me free because of relation. Yet it is treated as import of services, whether or not for consideration, whether or not in the course of business. So maybe it is not his business also, not my business also, simple personal services given, taken is also a service. Downloading of software free of cost, today what we do is also a import of services just for personal use, right? Now whatever we have all services in mobile, you are all professional businessmen. Everything what you do, today we get messages about change in the tax rates. On 16 September only everybody received the messages, rates have been changed from 5.5 to 6 from tomorrow. Is it not in the course of your profession? Yes. Who can say no, it is not? And many other things. So this is also covered as service. Foreign branch or principal rendering free service to Indian branch. Now, service, supply of service, import of service by me. Let us go ahead. Supply includes supply specified in Schedule 1. Very important thing now. Made or agreed to be made without consideration. We all today have the laws qua consideration, qua some valuable consideration, right? Today also there is an issue in a redevelopment of property. Service tax is leviable, people are paying. When it comes to VAT, it says no, it is not. Right? No monetary valuable consideration and so on. Now all this has gone. So whether consideration is there or not qua this, in Schedule 1, there are certain events listed out. And if that happens, even without consideration, is deemed supply. Let us see what it is. Permanent transfer or disposal of business assets. For example, assets gifted, donated, discarded, free, permanent transfer, disposed of business asset without consideration, supply. When my other co-speaker will tell you about the turnover taxable valuation, all this will be used over there. Right? Transferred free by operation of law, assets shared by partners during retirement, dissolution of firm. Permanent transfer from one person to another without consideration, yet a supply. So whatever you understand in definition for a consideration, Schedule 1 says even this following without consideration is also supply. Next, temporary application of business assets to a private or non-business use. So you use your certain assets or goods or property of business for your personal use or non-business use. So it can be car used for personal purpose. Hotel or restaurant using its hall for owner's own family function. Covered. Yesterday you had a hall given for rent for 3 hours, charged 2 lakh rupees. Next day you had a family function, 2 lakh rupees will be the deemed consideration, though not received or receivable. Services put to a private or non-business use. So the earlier clause speaks about the goods for private or personal use. Next is the services put to a private or non-business use. Hotel or restaurant catering food and drinks to owner's family. Chartered accountant filing income tax return of family. If I charge my wife a fee for that, what will happen? Architect or an engineer supervising construction of brother's bungalow. At least to brother he can say, I'm charging, show the invoice. But to a brother-in-law, all problems. Supply at above para 3.2 and 3.3 deemed as supply and taxed, yet ITC is denied in section 16.5. When we listen to ITC, so this is a contradiction. When I supply for some non-business use or use for some non-business purpose, I will be taxed, and on its purchases I will be denied set off. So double taxation. Right? This is simplicity coming now. Supply includes supply specified in Schedule 1. So further it says 3.4 para, assets retained after deregistration. Now this is something I could not accept it. Deregistration of taxable person may be due to closure of business, transfer of business, change in constitution or death of a proprietor, or, very important thing, tax authority cancels the registration on its own using its own power under section 21(2) for non-furnishing of return. You don't furnish return in GST, he has a right to cancel your registration. Or for contravening the prescribed provisions of Act and rules, he has a power to cancel registration, and if he cancels suo moto, maybe after giving an opportunity of hearing, but your answer and response is not satisfactory, cancel. Now such cancellation can be even from anterior date. Now what can happen to your tax collection and to the recipient of that supply having taken input tax credit? Think of all this. Now here, what happens, I discontinue the business, I have certain assets, goods unsold and all that. If you say that I deny set off, fine to that extent. But on capital goods, even today we have a provision on capital goods, no denial of even set off. I have purchased it for 4 years, 5 years back, used in the business for 3-5 years. Why you want to now disallow the set off?
and rightly they have not been disallowed. Now here it says, so all this, though I have no consideration, there is no transfer of property also, no supply also, but it is deemed as supply. Now this is something very dangerous provision. Supply of goods and services by a taxable person to another taxable or non-taxable person in the course or furtherance of business. See how wide it is. So these are all the deemed supplies even without consideration. What it says, supply of goods and services by a taxable person to even non-taxable person. To a taxable person I can understand. But suppose somebody is not in business, not a taxable person at all in the GST law, yet my supply to him will be treated in my hand as a supply. For example, free supplies. I supply free goods. I supply samples. I'm a pharma company coming out with a new product, or FMCG company, a new product launch, and supply sample. How taxable? Unless specific exemption is given, unless specific deduction is given in GST, weighted rules, but it will be taxable. Sales promotion expenses, right? I purchase certain dairies and sweets during Diwali to give to my associates, to my suppliers, to my customers. All this is nothing but in the furtherance of business. Gifts, presents given, goods donated. Just read this. If goods are donated to say Siddhivinayak temple, can it be covered here, supply of goods by me to another? Now that is also a taxable deity. In the course of, but I'll say that it is not in the course of business or so, right? Wait, whether we can say answer yes or no, let us finish this. Free supplies as per sales schemes. Now after the GST law, final law comes, every company, whosoever are running the schemes of incentives or discounts will have to be redrafted, reworked. Suppose what happens today, say my one shirt which I am selling is 1,000 rupees and I want to sell 3 shirts for 3,000 rupees to a customer coming to my mall. Now what I price it in such way that my price is 1,500 rupees per shirt, and whosoever buys 2 shirts, 1 shirt free. Right? I have recovered my price. Even my costing says my cost of this shirt is 700 rupees. I have my cost records duly audited, and I just run a scheme like this. Nothing is free in this world. So 1,500 rupees per shirt, 2 shirts if you buy, 3rd shirt is free. I have recovered 3,000 and giving the 3rd shirt. Now here, suppose in this invoice, my runs invoice like this, 2 shirts, 3,000 rupees, 1,500 into 2, then 1 shirt free, and then I now have to charge CGST and SGST. Now here, if I have to supply, if I have to add the value of this 3rd shirt, and value is now 1,500. So now I say that you will have to redraft all the schemes of discounts, incentives and so on. Supply to other person or agent or AOP to member, by AOP to the member, clubs, associations, societies and so on. Refer, just wait for some time, it will come in the next slide. Proviso at Schedule 1. Supply of goods by a registered taxable person to a job worker in terms of section 43A shall not be treated as supply. And 43A says special procedure for removal of the goods for certain purposes. Now this means that though I am supplying my goods to a job worker, maybe for manufacturing further, maybe for processing further, and I'll get back those goods. Now in this case, whatever I supply the goods to him will be treated as not a supply. So exclusion is there. Good. That it should not happen that again then I pay tax and again he charges me and go for input tax credit and so on. So a good deduction is given here. Now let us see, come to Schedule 2.
So what we did, we saw Schedule 1, we saw the main provision, Section 3, which says, for a consideration, supply of goods services taxable. Then it says, even if something is without consideration, Schedule 1 enumerated certain transaction and said it is a taxable supply, though no consideration is there. Now this is a Schedule 2, which says a transaction, whether it is a goods or services, we will tell you. Right? The issue what arises or which arises today or has already arisen in problem. Now today when I say that mine is a franchise agreement and I am giving a right to my contracting party to make the goods in certain way and to supply that. And I say that this is my only a permission I can give to n number of persons. A restriction is also on there that he does not have power to further give license to somebody else. No sub-licensing permitted. Now in this case, I say that it is only a service income. I am paying service tax, yet VAT is chargeable. Matters are in litigation, in high courts and so on. Now here, in one judgment, one agreement read and said it's a service. In the very judgment, other agreement is read and said it is a sale. Right? So complications. Now in this case, they say, don't worry, now we solve your problems. Right? Government is there to help us. How? It says, very important and interesting, following a supply of goods. So whatever now we are discussing, government has categorically made a provision that this will be treated as goods irrespective of what you understand, or irrespective of it what it means, or irrespective of it what you contract for, or what you intend for. So first, transfer of title in goods, fine, we understand this. It is a supply of goods. I sell it for 10 rupees, transfer of title in goods. Transfer of title in goods under an agreement which stipulates that property in goods will pass at a future date upon full payment or consideration as agreed. That means outright sale, sale on hire purchase or an installment, transfer property will happen in future date, last payment of installment and so on. Fine, all this is covered as supply of goods. So the provisions for supply of goods will be applicable to this type of transactions. Forget of services. Second, business goods or assets of a taxable person when sold by another person having power to do so to recover any debt owed by said taxable person is deemed as goods supplied by the taxable person in the course of or furtherance of business. For example, auction by bank or financial institutions who have given the loans. So this, when they sell it, it is deemed as I have sold it. Right? Friends, I have put up this, taken this from the draft law, put up in my wordings, taking from the provision. I might not have taken certain words, so but I am trying to just explain what it tries to convey. Maybe something more may be there, and I have reordered that for a logical understanding of her thought. So it's not in the same order in the law. Third, supply of goods by any unincorporated AOP or body of individuals to a member. Right? So we all gather together and form an association. So if there is a supply even by an unincorporated body to a member for cash or so is a supply of goods. Right? So whatever, say whether supply by incorporated AOP or BOI, answer is yes, that is also covered, because when I refer to the definition of person, it says incorporated or not covered. In short, they have been very cautious enough that even in unincorporated AOPs, they are supplying to a member for a consideration is supply of goods. Where any person ceases to be a taxable person, any goods forming part of business assets shall be deemed to be supplied by him in the course or furtherance of his business immediately before or ceases to be a taxable person, unless business is transferred as a going concern. That means If today I am doing business and tomorrow I cease to do business for some reasons, and this particular assets are a part of my business earlier, then it will be deemed as treated as supply by me in the furtherance of this business which is now ceased, other than business transferred as a going concern. So this clause wants to